Good weekend, all. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up. And this is for the weekend of August 9th, Sunday, 2020. Now, I normally put these updates out on Friday or at the latest Saturday morning. My wife had her big birthday, so forget that. Friends coming in, family coming in from all over. Yes, we paid attention to COVID with masks, gloves for those that wanted it, the whole thing, and held it outdoors. So did our best that we could, but life goes on, right? So over the weekend, what we have to now deal with is President Trump, again, following through on promises. The one thing, whether you like him or not, if he says he's going to do something, as twisted as those tweets are and the other things, he generally does what he says if he has the ability to do it. And he has the ability of executive actions. Whether they're legal or not, won't matter. The election will be there and gone, and then everybody can figure out what to do. So he did what the executive actions allowed him to do in his mind. He gave $400 a week to those that need the COVID relief. He's put in the eviction part where it'll be a moratorium on them if they're using federal funds in one way. The student loans were thrown out. There's more things that are in there as well. The question is now, how does the market view it when we reopen on Sunday night? As you know, you're not going to reopen this market formally until about 8:30 in the morning on Monday. And that's going to be what it is. The news waves all full of whatever people might think. But remember, we're at that election time. How do you take the 400 away and challenge it in court if you're a Democrat? You know, you don't look good taking the money from somebody. Is this a ploy to make a bigger deal? I think it is. But I think nobody wants to give much because it is right in front of the elections. This might be all you get too. We'll see. When I take a look at how the chart looks for the week in XLK, this could be called a breakaway gap. We have to study that, all right? If there's going to be a fill-in, the market then goes back to this 110.47. So from where the market's at, it's about a $3 break in the market plus, 3.25, something like that, and that would fill that in. As I take a look at the chart also, I look to see that we still have a bullish scenario of higher lows and certainly higher highs. You'd have to get under 100.31 in order to break that pattern. I see that the market is trading over the 18-week average, and this number is going to jump over this as soon as we open on 8:30. And the reason is you're going to lose one of these numbers back here. It's an 18-week average, and 18 weeks ago prices were lower, so this average will move higher. It's going to get a better weighting. So support will be in front of that number. What about resistance? It's right here, and this is the first time you hit it. What do you think I would have advised my clients to do on a weekly chart basis? Take your money off the table. The first time you hit a Bollinger Band, the way that I teach charting, that's where you come out of the market. And after this long, you take the whole position off and you reposition yourself again. You wait. That doesn't mean I'm right. Doesn't mean you're not going to gap and go further. But that's what I would have told my clientele. Here we are with momentum up, upper Bollinger Band. So all the trends are up. But you hit that key number, and you haven't done it since March. That's why I say what I did. This is a different type of pattern. Here, you were coming out of sideways action, and I have a different set of rules. Not on that. In XLI, I would be saying the same thing to you. The momentum is up, the bias is up, the trend is up. If it's going to reach, I think the pros will lift their positions off at 76.39. I know you'll tell me it's just getting going. Okay. But that's why I'm here. I'm not trying to be a contrarian. I'm trying to be a chartist, and I don't want to get involved with anything but the chart. That's what I think in that market. XLE pulled back in this the energy sector to the 18-week average of closes, and it's sort of sitting here. Momentum down. The settlement at 37.18 is under the 18-week average, so the bias is down and the trend is down. I think the pros went short this market. I think they'll be out if you get over 38.55, the last rally high. And actually, if you got over that, it would be a bullish sign. You'd then have higher lows, lower highs. Let's talk about the short sale. Are they really going to go short here? On the close, you have higher lows and you have lower highs. I think the right way to go short, if one is looking at it, you want that 35.30 taken out first. In QQQ, let's assume you reach up. Have you hit the upper Bollinger Band on a weekly chart yet? You have not. What do you think I'm going to say in unison if you get up to it this week? I think the pros will come out. What about EFA? Well, first off, momentum is up, bias is up, trend is up. If this market can take out last week's high, and last week's high was 64.46, well, it sets up for an immediate test of the closest moving average. That's the objective, not the upper Bollinger Band, this number, 64.82. It's not saying a lot, I realize that, but that's how the work goes for another 40 cents. If you can clear that and get up to that upper Bollinger Band, again, you haven't hit that since March. So maybe we go into a runaway to the upside and I'm totally wrong. There's ways to come in after the fact. In GLD, you've got now 3 weeks in a row over the upper Bollinger Band. In unison, does Ira ever tell you to buy over an upper Bollinger Band? Absolutely not. It's one thing if you're already long and you're riding it with tight stops, but buying over it, no. So, am I bullish? Sure. Do I think a correction's coming? Yes. Do I think it'll be to the right-hand side of the Bollinger Band? Yes. When? In the next week or two. Why? It's rare to get beyond 5 weeks in a row of over and upper Bollinger Band. Go and count them yourself. Tell me how many you find. You can write me on YouTube. They're rare. Therefore, the odds favor, just like the Bollinger Band, that only 5% of the time you stay over it. And my rule of thumb, it is not a magical thing, as I count each consecutive week as taking away of one of the percentage points of those 5%. So it leaves me with a 2% chance of staying over it or a 98% chance it'll pull back under it. That doesn't mean it's a change of trend, just that it'll pull under that band. GDX, first challenge of the Bollinger Band. You hadn't hit it. Here's the week's high, 42.24. You hit it once here. Then you did for a long time, since April, nothing. I'm going to tell you, I think the pros take their money off the table. And that's what I think went on. That doesn't mean they're not looking to buy it again. They probably are. But I think they'll see if momentum drops under that 80 level and they might hold back. I'm going to want to see where this 18-week average is. It's jumping right now about $1 a week, as you can see. So if I'm right, it's going to be around very close to this 36.87. I have to see what it does and make a determination on the weekly chart. Is that where the support's going to come in? In TLT, again, you haven't hit an upper Bollinger Band since March. If you hit it on this rally, that's where I think the pros will, excuse me, take money off the table. Momentum is up, bias is up, you're over the 18-week average, and trend is up. Support is back at 165.84, and no, I don't think traders are going to buy against that Bollinger Band. In addition, you had an outside week down. So an outside week down says this to me. If this week or the week after take out this week's high of 172.25, the odds are very strong that the market's going to make a run to the closest moving average or Bollinger Band. In this case, it's the Bollinger Band. If the market breaks from here and doesn't take that out right now, I still say the pros will buy this market. In other words, I don't see anything bearish at all. I think the market's still in good shape, and I'm looking for support not to take out this last break low here, but first to show up at 165.84. In FXE, the market's run up and stayed at twice already at the upper Bollinger Band and moved to the right-hand side. That's very good. That means you put into play the longs again. I don't think they'll buy over that number, but I think the algos and others will buy this market. You've got momentum still up. You've got a trend that is up. What's the number I don't want to see taken out? This week's low. It's an outside week and it closed higher. So if you were to take out 110.31, it sets up, to me at least, a probable test of the closest moving average under it, which in this case is the 108.67 number right now, which is the 200-week moving average of closes. So got the game plans as to what I see. I cover this in great detail daily, and I do these daily. At the close of business, in my ETFs. Now, I put these all out yesterday because of my wife's event. We had family in and all, but I got them out first thing in the morning Saturday. So let me tell you how this works. At 4 in the afternoon, typically, from Monday through Friday, I will record and post. And my trade ideas on the ETF and spiders. I do it then because I want you to see it ideally over the weekend before the futures open first thing in Sunday night, and then you can take a look. Gee, if the futures are down, hi, I like this long side, but got to be careful, you're breaking very hard. You use those. I also cover in them what I think the week's events are going to hold. So we'll be talking about just what went on. What did the president do? What does his executive actions mean? I cover all these markets and more. I even included BETZ now, and I'm going to add 4 more very shortly so that we have, before the fall season runs around, 40 charts of this. It covers just about what everybody likes to look at. These are really well capitalized ETFs. They're big volume in them. They're spiders the same way, and they're the popular markets you see on financial TV. So we get a look at them both on daily charts during the week, obviously, and then on the weekend, just what I'm doing here to bring you up. Now, my paid subscribers get to see more than you see. And what I mean by that is they're going to get also a Saturday morning edition of just weekly charts on all those charts. You're seeing just a very light touch of it without buy and sell recommendations. The cost, a little more than one Starbucks cup of coffee. If you get the big one, slightly more. Now you're through with that in 15 minutes. You got this for 30 days. It's a lot better. I can't put it any clearer. And once you get in the habit of it and you get to the areas you want, you can work with them. Now, on our website, there's a scroll bar. And you can go to the spiders. You can go just right into the stock indices, whatever you'd want. It's easy to get around. Just go to our website, under the word research, everything's explained there. The subscriptions are there. You can even take the combo with a combination of the futures and the spider ETF for a full package, and it really helps because regardless of what I say in 4 in the afternoon, there's an evening event, and I've caught up with it at 5:40 in the morning with my new videos for the futures, and it really, I think, has an impact on the spider ETFs. I'm Ira Epstein. You have a great day, and I will see you tomorrow. Take care.